What's up everyone, it's Caddy with Money Investing. Welcome on board for another Market Open live stream here. So we do have inflation numbers coming out bright and early in about under 16, a little bit under 17 minutes. So that's going to be the October CPI print. We're going to get the total CPI numbers year over year, month over month, and we're going to get the core CPI numbers year over year and month over month. So I'm going to break down some of the consensus here. Just give me a thumbs up if you guys can see me and hear me. Just want to make sure that the audio and the video is working well. The QQQs right now are pushing up over 0.5%. We do have the SPY pushing up 40 basis points, and the Dow Jones is also higher, a little bit over 24 basis points at the moment. We do also have a poll going on for the CPI numbers, so make sure that you do vote if you haven't already. I just want to make sure that the poll is going on. Let's see, I just gotta maybe reload this, but we do have a poll. I'm pretty sure that we do. Here, let me take a look. Yeah, if you don't, then I'll just start a new one because we did have one going on. So yes, see and hear. Okay, perfect. These are the expectations going into the print in under 16 minutes now. So we are expecting, well, the consensus from the market really is 0.7%. So 70 basis points increase on a month-over-month basis. Year-over-year, headlines expected to remain at 8%, although it's expected to come down from 8.2 to 8%. And then for core, month-over-month expected to be 0.5% increase, and then year-over-year expected to be steady at 6.6%. And these are going to be the bear case, base case, of course, optimistic and bull case. Going over to some of the assumptions here. Very quickly. So Bank of America is expecting 7.8%, Goldman Sachs 7.8%, Credit Suisse 7.8%, 7.8% from Barclays and Nomura. Then JP Morgan, Jefferies, and TD Securities 7.9%, Morgan Stanley, Wells Fargo, Investing.com 8%, and Scotiabank 8.1%. So we are very much pegged for some very good inflation prints on a year-over-year basis from some of these banks. And this is again going to be the consensus, which I went over earlier. 8.8% is going to be that consensus. And there's also the Cleveland Fed, right? They also make those predictions, and that's going to be the white line. They're expecting year-over-year inflation to be 8.1%. And for the survey, for the analyst survey, we're expected to be at 7.9%. And of course, right now we're sitting at 8.2%. So we'll find out what those numbers are going to be in now under 14 minutes. So again, a super exciting time. This is very, very exciting for the markets. This is going to be a market moving event, obviously. So should be very, very interesting. And yeah, this is going to be it. So we're going to listen in to when the numbers come out, and I will also reload this page over here as soon as the numbers come out. This right now is going to be for the month of September. So again, we saw inflation jump up 40 basis points in the month of September. We're sitting at 8.2%. And then right at 8:30 a.m. Eastern, we're going to reload this page to get the numbers for October 2022. So I hope you guys are excited. Yeah, we're all set. We're all ready to go with the markets here. So a couple different charts that I want to go over also. First one's going to be, let me see if I can find it. Yeah, I can't. But, bottom line is that inflation, every time we've actually came in worse than what the expectations were, the markets have dropped. Every time we've come in better than what the expectations were, the markets have rallied. With the exception of the last print that we got for the month of September back in October. And that was a wild swing for the market, right? We pretty much sold off pre-market when the inflation numbers came out. We were down 2.5%. And then we saw a huge rally of 5% intraday to close above 2.5%, closer to 3% for the markets, right? So that was such a wild swing for the markets on that day because of CPI numbers. And even though they came in much worse than what the expectations were, we kind of hit the nail on our bear case. The market still rallied intraday. But of course, on the days to follow through, as investors kind of digested all that report, we obviously sold off quite aggressively on the days to follow. So, all right, let's see here. Let me take a look at some of the comments. So, let's see. Bloodbath in 13 minutes. Randon says, let's see, get your parachutes ready. Most people say we are in good for CPI numbers from analysts. Yeah, so CPI analysts are expecting some good numbers, but I doubt, it really depends on where shelter prices go, right? Shelter prices, food prices. We know that energy is going to be a little bit higher. So in the month of October, I actually wouldn't be surprised if oil prices are higher. Natural gas was lower. That's a good thing. But we'll see what overall energy prices were like, right? Are we going to see a decline? Are we going to see some upside? And then, of course, shelter, the rents are going to be the big wild card for inflation when it comes out in about under 12 minutes now. So, okay, apparently we don't have the poll going on, but this is going to be the bear case, base case, optimistic, and bull case. So what we're going to do is I'm going to quickly run through a poll. I may need to reload this page. I'm going to quickly reload this page because the chat is not showing up. So let me see if I can just reload it. Hopefully this doesn't bump me out of this live stream. I just want to make sure that okay, there we go. Perfect. So we do have the poll going on. There it is. Right there. So we have the bear case, base case, optimistic, and bull case. So make sure that you do vote if you haven't already, and also make sure that you drop a like. We've got 48 likes right now. We have over almost 500 people watching, so just a tap of a like button, really appreciate it. That really helps us, grow the community, grow the channel, pushes the stream out to more and more people here. Another thing I want to go over, we've got 12 minutes here, 11 minutes, whatever. Tesla is down almost 2% right now, coming down to $174. And what's really interesting is that Daniel Ives, he works at Wedbush Securities. We've had him on the channel. We've interviewed him before. The tides have really turned. This is something that he tweeted about an hour ago and about 21 minutes ago, saying, and I quote, "And now sitting on top of the peak of the mountain with Tesla in a massive position of strength, Musk has managed to do what the bears have unsuccessfully tried for years, and that is crush Tesla's stock by his own doing in what we view as a purely painful dark situation, cutting price target down to $250. That's down from $300. And he goes on by saying, and I quote, we still believe in the long-term bullish thesis on Tesla. That view is unchanged, but this Twitter madness needs to end. Brand destruction is our biggest worry with this Twitter circus show. It's that simple, and I can't ignore it for Tesla stock." So, and I was talking about this with Steve earlier in our Discord, and the bottom line is that this has really been such a mess, right? It's been a complete chaos for Tesla stock specifically because it's been caught up in that collateral damage with Elon's acquisition of Twitter. It's just, it's been first, you waive due diligence, you put in an overpriced offer, then you back out of the deal, then you're forced to buy Twitter, and in that entire situation, you're forced to sell Tesla to finance the deal, and now it's going to really drain a lot of the resources, time, and money as you try to make this work, right, with the Twitter. So, and when it comes to electric vehicles with EVs, the competition is as fierce as it's ever been. Like literally, when it comes to electric vehicles, the competition has never been this severe. So, just my 2 cents that Tesla needs Elon Musk now more than ever, and it needs pretty much his full attention because every single EV auto manufacturer, electric vehicle company is coming after Tesla's market share, literally everyone. So, it's just a focus thing, and really the investor sentiment is really weakened over the last few days. And you notice that since November 1st, like since the 1st of November, Tesla stock is already down 25%, right? Since we've heard about, what's going on with Elon's acquisition of Twitter. So yesterday, also a pretty brutal day. Today, starting off down almost 2%. So we'll find out, where it eventually bottoms out. But right now, it's definitely trading now down to our intrinsic value. 167 all the way down to as low as 150s is going to be that support level to watch for Tesla moving forward. So, all right, so we got less than 8 minutes left. 8 minutes. Make sure that you do vote if you haven't already. We got very exciting inflation numbers coming out. I will be doing an audio check here very soon. We're all right. So Chris says, damn, Ives telling it straight. Yeah, I think he's 100% right. I think the focus is really, really important here. And with Twitter, I think there's going to be a lot of resources, time, and money, and that's pretty much going to drain a lot of these things as Elon tries to figure out how to make this work. Because $45 billion is not a small sum, especially for a company like Twitter. So definitely, the return on investments is something that's very important for Twitter here, for Elon Musk. Okay, so now we'll talk about new earnings as well, but I think the main focus right now is going to be on inflation as there is less than 7 minutes left for that print to come out. I'm going to do a quick audio check just so we're on the same page, just so everything is working good, working well. So let me know if you guys can hear this. Just give me a thumbs up if the audio is working well.
Very thin trading, and the purported values, and I say purported values, might be only on very few trades, and then others are sitting with large buckets of these tokens. And we saw this happen with the Terra Luna tokens earlier this year, and there was a token in the middle of this as well. What was its value? Where there are only a few holders of it? What was making those values? Secondly, you said disclosure.
Perfect. FTX also is not getting bought, unfortunately, by Binance. So that is another thing that is going to be put on hold, and we'll see how FTX kind of weathers through this storm right now, because Binance was going to be buying it, but then they pretty much said that, look, never mind, we're not going to be putting in an offer anymore. So but anyways, so QQQs here, pretty much up 0.5% right now, ahead of the CPI numbers, and now under 6 minutes left. We got the SPY up over 35, we got the Dow Jones pushing up over 28, and we got the 10-year yield just a little bit over 4% right now. Volatility is up a little bit over 1.4%, so trading back over 26. Crude oil prices have been selling off, so they're now under $86 per barrel. So that's good. And of course, we've seen a bigger decline in cryptos. So Bitcoin, Ethereum obviously have been selling off quite a bit. Ethereum recovering a little bit, up over 9%, so back almost at 1,200. And Bitcoin also trying to regain some momentum after being incredibly oversold, and of course selling off in 2 consecutive days, down over, let's say, 21,000 down to 15,000. So 27% decline in the last 3 to 4 days, pushing higher almost 4% right now. So, all right. Let's just get ready, man. 5 minutes left. How excited is everybody right now? Just let me know. What's the sentiment here? Are people feeling nervous? Are people feeling excited? Are people feeling confident? What's the sentiment here in our live chat? What does everybody think is gonna be the case for inflation? Because right now we do have 42% expecting the bear case, right? So we still have a little bit of majority expecting the bear case, and then 25% the base case, right? So that's pretty much in line with what we also have. 12% definitely expecting the bull case to come in, and about 21% optimistic. So, okay, I see a couple of people nervous and ready to make money no matter what happens, Damien. I love it. So should be exciting, right? Should be really, really exciting in under 5 minutes now, under 4 minutes. So I'm going to shut up at the 3-minute mark. I'm going to play this. We're going to listen in the background. Then I'll reload this page. And then I'm going to actually put this in the back as well. What we're going to focus on is, of course, the inflation print. I'll reload this page right at 8:30 a.m. Eastern. Hopefully, we'll get that new report right away, and then we'll see the market's reaction. I've got the QQQs here at the top right. We got the SPY at the top left. We got the yields, and we've got the Dow index. I'm actually going to switch this over to the dollar just to have that on there as well. So we'll have the dollar index on the bottom right, the yields, and of course, the 2 major indices, the NASDAQ and the S&P 500. So, perfect. So, Caddy, adding to the competition EVs market, problem Tesla will face in the near future is that BMW, Mercedes, Audi, Porsche all have better quality products already in terms of build quality. Yeah, I guess that is also a little bit more subjective too, though. Like build quality, I mean, really depends on who you're asking. But sure, I get the idea. Like the competition is going to be more fierce in the EV market now more than ever. So, really, I mean, this was not the great timing for Elon to be diverted, in terms of his focus over to Twitter. We've already got SpaceX, we've got Neuralink, we've got, the Boring Company, we've got so many different projects that he has working on. Twitter is just another one that, is coming in. So what is the base case? So base case is pretty much hitting expectations, right? So we've already talked about them. But this right here is a spreadsheet. The base case is pretty much in line with what the consensus is. The bear case is much worse than the consensus. Optimistic is slightly better than the consensus, and bull case is deflation, which is what Cathie Wood's predictions been for a long time. So that's pretty much deflation in the pipeline. All right, so we got inflation in under 3 minutes now. 3 minutes, 2.5 minutes to be precise. So this was just an extension of that tweet. Wedbush removes Tesla from its top stock list, says Twitter deal and Albatross, and reduces price target down to 250 from 300. So that was just an extension of that Twitter post.
it laid out in late October. Nike, of course, has not disclosed revenue details for the Kyrie Irving collaboration, but Knight did say that loss is not going to be material to the business. Now, when we come back, we've got the number of the morning, CPI. Stick around. We'll be right back.
All right. 1.5 minutes. should be interesting. I'm gonna actually food prices were also higher as well. All right, 1 minute. Let's do this. Alonso says I feel butterflies in my stomach. That's usually how it goes. That's usually how it goes. Steve says, Caddy, I feel very nervous, but mainly I feel drunk. You may want to drink some water there, Steve, just for the report. Just so you get sober up a little bit, you know what I mean? And then, depending on what the report's like, you can kind of continue in either celebratory drinks or either just depressing drinks, right? So, depending on what you favor. All right, perfect. So, again, quick review here. QQQ is in the top right. We got the SPY at the top left, the yields, and of course, we got the dollar index on the bottom right as well. I'll reload this page in about 30 seconds here. I'll keep it on the markets just to see what that reaction's like in 3 seconds. And then I'll quickly switch over to the inflation print. All right, so we're seeing a little bit of momentum here. Market's pushing higher. Let's just reload this very quickly. Nothing yet. Nothing yet. Ooh, market's pumping quite a bit, 3.3% here. All right, there we go. 0.4%. 0.4% was that number. Ooh, look at that. Inflation under 8%. That is incredible. That is incredible right now.
Definitely cooler than expected. And 1.3 from June of this year was the high water mark going back to 2005. Up 0.3 when you strip out food and energy. The high water mark there was April of 21, up 0.9. Year over year, up 7.7. Definitely less than 7.9 expected. High water mark there, 9.1 in June of this year, going back to 1981. 6.3 on X food and energy year over year. And that was the one many were very nervous about. Last month, it was 6.6. That is the high water mark going back to 1982. On initial claims, 225,000, which means it's up 7,000 from a slightly revised 218,000. And on continuing claims, 1,493,000, about exactly as expected. So on the inflation front, definitely a bit tame, but it's hard to say that these numbers are cold, especially year over year. Back to you.
Wow. Rick, while you were talking, that was pretty unbelievable just to watch the Dow futures. I think we had on the chart the whole time. Again, right before this number, the futures for the Dow up by 50 points. Now they're up by almost 650, and it took off immediately. I don't know if we can take a look also at the 10-year just to see what was happening with that. Rick, you were busy reading the headlines on some of these things, but what are your thoughts about this movement that we've seen? Wow, the 10-year note falling below 4%. What do you think,
Huge move in
Rick?
Fed funds also.
Yeah, I tell you, the 10-year note below 4% is huge psychologically, obviously, but I think we get some good insight into the trading community as to what they consider an easing with respect to inflation. So these numbers might look a bit on the warm side just in general, but to watch the equities, to watch the fixed income markets, I think it screams volumes that we are on the right path and investors are going to be piling in if we continue to see these trends.
Every asset class moving. I saw the dollar down by 0.75%. I saw Bitcoin up by over $800, back above 17,000 plus. Let's get right to our panel for some instant reaction on this. Former Council of Economic Advisors Chairman Austin Goolsbee is here. Former acting CEA Chairman Tyler Goodspeed. Nancy Davis from Quadratic Capital Management, Nationwide's Kathy Bosjancic, and our very own Steve Leisman. Of course, Rick is here. We've already seen from him. Steve, very quickly weigh in on the components that matter here. What changed and what changed drastically?
You had a moderation in shelter. That helped a bit. What am I looking at? Owner's equivalent rent here up 0. I saw 0.5. I don't see that anymore. I'm going to check on that in just a second. You had used car prices declined 2.4%. You had a decline in apparel as well. So, you know, I guess I have a hard time getting really excited about a 7.7% year over year.
3.9 over 10 years, Steve.
I'm just saying. Look, the progress since June, when we hit that high of 9.06. Do the math. We've come down 1.3 percentage points after a massive increase.
Steve, it's so clear there's going to be a pivot now.
Do people on the radio see the smile on your face, Joe? That's what I worry about. But let me talk about that, Joe.
The pivot's coming.
The pivot's coming.
It's working.
Very quickly.
They've done enough.
There was a big pivot in the Fed funds futures and the peak rate, which I have now at 4.90. We were in there at 5.06, so we're down below 5% on the peak rate.
Okay. Austin, Tyler, let's bring you two in. What does the Fed do at this point? Austin, look, this was not only not as hot as had been, not hotter than had been anticipated, not as hot as had been anticipated. Obviously, 1 month doesn't make a number, doesn't make a trend, but man, the market's reacting in a big way.
Yeah, at first I thought they just love Rick. You know, Rick talks, boom, there it goes. The thing about this, the most important number to come out of this monthly report is not the year over year. It's that monthly core inflation. That it came down is great news. It's not a trend because it's just 1 month, and it's not that low. I mean, at 0.3%, it's great that we've made progress, but that still remains higher than where the Fed wants it. Normally, if they're in a period where they're raising 25 basis points per meeting, there's a little more space for cooling off period. If you're raising 75 basis points a meeting, we're going to have to figure out what the timing is of the pivot. And unless and until you get that core monthly inflation down in a comfortable range, I think the voices that are saying slow down, cool off are still going to be a little muted.
The market's not listening to you yet, Austin. The Dow is now implied up by 783 points. Go ahead, correction, Steve?
That's correct. Yeah, it was 0.6 on owner's equivalent, not 0.5. It just came, but it did come down from 0.8. I think that helps a little bit.
Tyler, your take on this. Does the Fed have any less pressure on it at this moment as a result of these numbers?
Well, I agree with Steve that there's actually a little bit less that's encouraging, and it's great that core came down. It's great that headline came down. There's a little bit less to be encouraged about when you dig into the details. I think, and correct me if I'm wrong, Steve, looks like overall shelter was up 0.8 month over month.
Yes,
and
that's correct.
It looks like this was dragged down by gas, fuel, and also used cars. Pretty much, those are the big drivers. So I think in terms of the Fed's thinking, look, the lesson of the 1970s is they tried 4 times before Paul Volcker, and actually including early Paul Volcker, they tried to get inflation under control, and each of those times they paused or pivoted before the job was done. And they didn't pause because of a 20% equity correction. They paused because there were financial stability concerns. They paused because inflation was coming down, even though it wasn't down below 3% yet. They paused because unemployment was ticking up. And so I think that the lesson of the 1970s is that we could probably be looking at a Fed that draws some of these different data points as motivation for a pause or pivot.
All right, can I just say, investors right now are going la, 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 not listening to any of you because the Dow futures are now up by about 800 points. Nancy, what do you think? Does that make sense, the market reaction to this?
It does. The whisper number was for a softer CPI, but I think the market, everyone is so bearish. Consensus is definitely that we're heading into a recession with market participants. So it's not surprising at all that with a softer number, we're going to get a good pop because a lot of people have been, leaning the other way. So it's always good to be a contrarian, especially when you see the numbers. And, they're still incredibly high. And I think the one thing I would remind investors that future inflation expectations are actually ridiculously low, even though we got a slightly lower print if you look at inflation break-evens, they're all in the 2 handle, even just 1, 2, 3 years out. So the inflation curve is dramatically priced to fall, and that could be an opportunity for investors to say, look, maybe it's a good time to be adding some inflation because the market does have so much confidence that the Fed is going to get the job done here.
Nancy, fool me once, fool me twice, 3 times. I mean, previous pivot false starts, we saw some pretty good rallies based on the notion that the pivot was coming. Is this real this time? Just the possibility? Or is it buyer beware? We've seen it before. I mean, why are people so quick to embrace something that's burned them so badly before?
Well, I think it's all about expectations. Just like stocks, the rates markets are all about what's expected in the future. And going into the summer, the market had priced in cuts in 23. Now we are fully pricing in more hikes. So.
Oh, sorry. Now I was asking Steve to look at Fed funds. I just want to see.
Keep talking, Lance.
486.
Yeah.
Betsy, if you can hear me over the airwaves here, make another chart. We'll get that one up. Thanks, Betsy.
486.
Nancy, go ahead. Finish your thought.
My thought was that the market has priced for more hikes. So I think there is room for the Fed pivot, so to speak, because in the summer, the market had priced in cuts going out into 23, and those have really been erased. So there is room in the rates market for a surprise to the upside.
Kathy, let's get you into this conversation too. Again, I don't know how this changes your economic outlook, but in terms of what you think it means for the Fed, what happens here?
Well, it's certainly an encouraging number, Becky, but I think we do need caution that, as been said before, we've been fooled before on numbers, and we're going to get another very important inflation print the first day of the 2-day meeting for the Fed when they meet again for the policy meeting. And I think in terms of the pivot, I see the market jumping to the last pivot. So I see several pivots. The first pivot is, okay, when did they reduce the size of the rate increases? And that today's numbers does support the idea they go from 75 to 50 in the December meeting. But that, as Chairman Powell said, they're not done yet, and there's further to go. And then the pivot after that is, well, when do they pause? What's the terminal rate? And that's what the market, Nancy was indicating, the market's trying to struggle with. And that's come down a little.
All right, everyone. So what a freaking print. So what we really did was we kind of hit the nail on the optimistic. We actually hit 3 out of the 4 fronts. We hit the optimistic, and CPI year over year, 7.7%. Just absolutely insane print coming in line with the bull case, which was only a 5% probability. So absolutely crazy number. 0.4% increase month over month, which was optimistic, 7.7% year over year, which was bull case, and 0.3% coming in core month over month. I think this right here, these 2 numbers were the big reason why the markets rallied the way they did, right? After the numbers came out, 0.3%, only a 30 basis point increase month over month versus the expectations of 0.5. And, prior numbers were 0.6%, so pretty much half. And then year over year coming down from 6.6 to 6.3%. Also optimistic, and the market's reaction is very clear. And we got the QQQs up 3.75, almost 4%. Pretty substantial rally here. SPY is pushing up almost 3%. And we've got the dollar index pretty much dropping down under 110. And the yields are also under 4% right now. So significant move to the upside. If you break down specific things within the inflation print, energy was higher. Energy was actually higher. So energy was up 1.8% month over month. And this is something that we were expecting because in the month of October, energy prices were higher. If you take a look at the last couple of months, 2.1% decline, 5% decline. So in the month of October, energy prices were down. It's kind of interesting though, because month over month, we did see shelter prices higher, energy prices higher. Food was also up on a month over month basis, 0.6%. And shelter was up 0.8% again. And yet month over month and year over year numbers came below expectations. I understand the year over year numbers because they're fighting against significant comps, right? So if you come back up here, we're kind of going against numbers that we were like 0.9% same time last year, 0.7%, 0.6. So obviously when you're working through these comps, year over year on the surface numbers will come down, but month over month we're kind of stabilizing down to 0.4% for inflation. So it was a very, very interesting print. And then, of course, on CNBC, some people were saying that, there's not a lot to like. Year-over-year numbers are coming down. That's great. But month-over-month, we're still seeing shelter prices go higher. Energy prices were higher because oil prices were higher. Food prices were higher. Apparel was down substantially. So used cars and trucks was down 2.4%. We did have apparel come down 0.7%. Commodities, less food and energy, was down 0.4%. Medical care services 0.6%, and then utility piped gas service was also down 4.6%, and then dairy and fruits and vegetables down 0.9%. So Fed funds futures are pretty unchanged. Again, we'll continue to kind of reload these to see what those how the interest rate projections change. It's going to be mostly towards the 50 basis points is my view. There we go. Just now we updated it. It's an 86% probability, about 80% probability that the Fed is now going to raise rates by 50 basis points as opposed to 75. That's only less than 20% at the moment. And of course, markets kind of seeing that as a big bull catalyst. Meta's up almost 4%, Apple's up over 3%, AMD's up over 4.8, almost 5%, Tesla's up 2.5%, Amazon is up a little bit over 4.8, almost 5%. So lots of momentum coming in. Nvidia is up a little bit over 5.4. So looks like we've got a very significant green day on our hands. We've got a very, very crazy green day on our hands, folks, after the incredible inflation print. And yeah, this is what it is. Fed funds futures kind of pivoting back to 50 basis points, a very strong print. Not from a month-over-month standpoint. I would still say that shelter prices were higher, energy was higher, food was higher. But somehow we kind of hit the nail on the optimistic and the bull case, which is what the markets are reacting to, and very, very positively. So yeah, that's where we are. Congratulations, everybody who's got calls and who's definitely playing on the long side for the markets. We still have QQQs kind of busting through that high of day so far, 273. We got the SPY also kind of testing that high of day. It's up over 3% now, and QQQs are 4%. 4% today. Yields dropping quite aggressively. Down 4% the yields are. So, that's a good thing. That's exactly what we wanted to see, and very, very nice move to the upside. And let's take a look at some of the small caps too. So let's take a look at ARKK. ARK, look at that, 7% move to the upside for ARKK right now. So pushing higher aggressively. So let's just run through some of our watch list items. Let's see what other stocks are doing. So Disney is up over 1.68. It actually did sell off quite a bit yesterday on earnings. Upstart is up 7.2%. Back over $18 right now. Had a very strong green candle on a red day yesterday. AMC right now is up 4.2. Snapchat pushing higher 5.3. We got InMode pushing up 6%. Digital Turbine on earnings also is now up 30%. Just absolutely insane momentum. Shopify is up over 9% right now. Alibaba pushing up 4%. Let's take a look at NIO. It is up over 10% right now. Doesn't feel like 2022, does it? It just, so much green, you're like, wait a minute, is this 2023 already? What is going on? So yeah, just absolutely incredible move to the upside. So let's see, some relief, but let this unfold over time, correct? And again, we're going to have to see what happens throughout the rest of the day and how the markets trade. But in my view, considering that inflation print was so good, I doubt that we're going to see a significant reversal intraday. But again, anything is possible in this market. So I'm not going to rule that out. But, from the looks of it, we definitely did get a very strong inflation print. Not only from a month-over-month standpoint, but also from a year-over-year. Because think about it, right? We almost came in better than expected for everything. All 4 items we came in better than expected. And I think there were 3 really positives on the surface here. Year-over-year coming down to 7.7%, which is pretty substantial. If you think about from 8.2 to 7.7, that's like a 50 basis point drop. And then month-over-month core and year-over-year core coming in way below expectations, like way below what the expectations were for the market. So Fed funds futures again switching back over to 50 basis points. Yeah, this was the print. This was the print. So all right, let me just go over some of the comments here. Jason says this is real. Bobby says Caddy forgot his red shirt. Yes, so I did on purpose. I don't want it to be like last time, and the markets just pretty much dropped like 3%. Mill says, I think this is it. This is the bottom. Robinson says, bull party. Austin says he's not going to pivot in December because he'll make a point and maybe pivot on the next meeting if the trend continues. Yes, and again, it really is important that we understand that one data point obviously doesn't make a trend. We have to really see this through all the way through December, and of course all the way through next year as well. So if this trend continues, if we continue to see inflation roll over and come down, then that is a very, very good thing for interest rates, right? Then eventually, finally, we'll see the Federal Reserve call it quits, pause interest rates, and then that will obviously be a very, very strong catalyst for the markets to the upside. So, this is exactly what we have talked about in terms of how you want to be invested for a time when these things happen, when inflation rolls over and the Federal Reserve starts to really pause and pivot. Because in that time, the markets are just going to absolutely go crazy on the upside. And you're going to be like 4%, 5% green days are going to be pretty normal for the NASDAQ. So can't wait for Caddy's voice with the happy face. But yeah, this is it, man. Congratulations to everybody. Really, we'll see how today kind of ends up playing out. But this definitely is a very good inflation print, I would say. Like coming down to these levels, I think was very important for the market. You're already seeing us roll over in a very, very substantial way. So if this continues, that is good because we're now coming down to our same levels as January, right? So actually even lower than January. So here, let me just point that out. So if we simply draw a line to where we are now versus where we were, we are coming down to, so this level right here can be very much comparable to actually a little bit between January and February. So at the beginning of this year. So that's where we are with inflation because this level, again, we've pretty much come down from this entire 2022 inflation print. We've come down to the same level as we were at the beginning of this year. Of course, core still has a lot of work to do. We're still, where we were back in August. Of course, we were below that level throughout the summer. We were above that level at the beginning of this year, so we still have a lot of work to do for core to come down even more. And then course kind of stabilize down to like 4, 3, 2% around those levels, so it can really help interest rates. But headline really coming down to some very, very good numbers. So all right, let's see. Justin Caddy didn't buy anything though, so I still have cash good puts on companies. So like Tesla, for example, is still in the money. So if I get assigned, I will get 100 shares of Tesla at 191. Google is already in the money, so cash good puts already in the money. So if I get assigned, I'll have 100 shares of Google. AMD is in the money, so again, if I get assigned, I'll have 100 shares of AMD as well. And then, of course, just a few other names that are in the money. So if I get assigned, I'll be buying, or I'll get assigned 100 shares for those companies. So that's pretty much what the strategy has been. All right, perfect. So $3 billion in short squeeze. Yeah. Finally, a little bit of breathing room. We'll see how long this actually does last, because again, markets can be very, very erratic. They can kind of suck you in, push higher, and then kind of rotate back down and start to sell right back down. So it's really important to be careful in those environments. So anyway, so NEO did report earnings. They kind of missed on revenue and EPS. I'll break that down in a separate video, but they are pushing higher quite a bit, 10%. And of course, they've got delivery numbers that were released back in November, I think November 1st. And right now the technicals look really, really weak for NEO. So resistance is still going to be over here, sitting roughly at around 1050, 1047, around those levels. And of course, all the way up to as much as $12 to as much as $15, $16 per share. Technicals obviously really, really weak and oversold for NEO at the moment. So will it continue to rise when the market opens? That is the question, right? That's the question of the day. Where will the markets continue to gain that momentum on this inflation print? Or are we going to expect some type of rollover? Amazon up 5% now. Pretty significant move to the upside here. AMD is up almost 5%. NVIDIA is up over 5%. Apple is up over 3%. And then Tesla is also up over 5.6%. There we go. Very, very strong momentum for Tesla also coming in. So let's see if we can actually trade back above 191 or not. Or actually 190. So yeah, we'll see what happens when the market opens here. But lots of names, just absolutely just charging higher, especially ARK. And if you take a look at all the yields, pretty much all yields across the board, including the US and the UK gilts, they're all rotating back down, right? So we got the 10-year yield now under 4%, down 4% here. The 3-month is sitting at 4.17. The 1 year is sitting at under 4.6. The 6 months sitting at 4.5, to 20 years sitting at 4.3, and the gilts also selling off down under 3.5%. So as yields are coming down, that's putting upwards pressure, on equities, right? So they're definitely charging higher quite a bit. Mill says it's about time, Caddy. It is the bottom. Well, again, you know, right now, yes, the market's pushing higher. Can definitely feel like, oh, the sentiment's definitely shifting, right? This is it. You got to be buying, right? This is the FOMO that kind of kicks in. But just, you know, be careful, be cautious. Obviously, there's no reason for anybody to be going all in just because inflation kind of rotated back down a little bit and the markets are up 4%. Just be cautious, right? Just, you know, always have some dry powder ready. You never know what can happen in the markets. We've already seen what happened in the last inflation print, right? The markets were down 3% pre-market, and then they rallied 5% intraday to be up 2 to 3%, right? So just, you know, be cautious. There's no reason for anybody to be like, oh, this is it. This is the bottom. We're going all in. That's it. Markets are never coming down again. Just be careful. Sunday says Santa rally we were waiting for. Yeah, so after the actual midterm elections, the markets are usually green on average over the next year. So, you know, November, December usually has been very strong in midterm elections. So, you know, that's something that's also working in the favor of the bulls from a seasonality standpoint. So a couple of people saying rug pull at the open, market's going to sell off at the open. So we'll see. We'll see what happens in about 35 minutes here. So, but right now we're definitely seeing a lot of momentum, especially for companies like Amazon and Meta and Tesla and Nvidia, AMD. They're pushing up 4, 5, 6%. Oil prices right now are kind of testing that resistance at around $87 per barrel. And we also saw a very strong momentum coming in for Ethereum. Ethereum's now up almost 18%, right? So 18% back almost at 1,300, and Bitcoin's up over 10% right now. So back over 17,400. So lots of momentum coming in for Bitcoin and Ethereum as well. All right, let's take a look at LBU. So let's talk about some levered plays. LBU is up over 10, almost 11%. How is SOXL doing? There we go. SOXL is up 14% right now, 1054. So this again is one of our trade ideas for the semiconductor sector because of how, you know, cheaply it's priced right now. SMH and SOXX, they're both priced at 17, 16 times earnings. Technicality wise, really, really oversold. So this is one of the trade ideas that we have on SOXL for a little bit of a leveraged play. And then let's take a look at Square. So Block right now up almost 9%, so back over $62, pushing higher quite aggressively. Yeah, Neo's up 10%, definitely pushing higher quite a bit. So Patrick, Square, yep, so Square. Siren says, find a red stock. Okay, that's a challenge. Let's do this. Anybody? Let's just try to find a red stock, except for leveraged ETFs that are inverse, right? So I'm not talking about SQQQs because that will be down 12% because it trades inversely to the market. But let's try to actually find a red stock if we can. Peloton? Nope, that's also up 7.7%. Coinbase, 9.4%. Trade Desk up 8%. DraftKings up 6%. Man, Tattooed Chef maybe? No, even that thing is up 4%. Baidu's up 5%. We got InMode pushing higher. Zim Integrated's up 3.8%. Shopify is up 8.9%. Nano Dimensions maybe? Nope, 4%. Novavax, 5%. Datadog, 7.6%, 7.7%. CrowdStrike, up 6%. Palantir, definitely. Oh, it's up 5%. Every single name is pushed up 4, 5, 6, 7, 8%. It's insane. I think it'll be a hard time for us to find a stock that's going to be down. Red. Pre-market. Yeah, Siren, I think that's a great game that we can play. Find a red stock. I think it's going to be a tough time, though. Trying to find something that's down. Pre-market, Dropbox, nope, up 4%. Starbucks, 2.8. Adobe is up 5%. So, yeah, Activision Blizzard up 1.2. Let's see, Twitter, maybe? Nope, pretty much no trades right now. Take-Two Interactive's up 4%. So, FOMO trap or start of a pivot. Well, Jerome Powell, right now, when it comes to the Fed funds futures, they're still pricing for 50 basis points, right? So 50 basis points is not a pivot. It's an interest rate hike that's still going to be pretty aggressive. It's 2 hikes in one. So a hike is 25 basis points. If they do 50 basis points, that's 2 hikes in one rate, one single meeting. And then starting, let's see what the probabilities are for January of 23, like going into next year. So probabilities for all right, so CME, FedWatch tool, because I'm interested in kind of seeing what the probabilities are for 2023 and have those changed at all from what we have already seen. All right, so there we go. Right now, there's an 80% probability. Okay. So the probability has changed a little bit. 80% probability that we're going to see a 50 basis point hike, and then a 54% probability, in other words, majority, expecting a 25 basis point hike in February. And then in March, another 25 basis points for us to get up to 4.75 to 5%, and for us to stay there until September, and that's when the Federal Reserve is going to start cutting rates. At least that's what the expectation is from the Fed funds futures. So Spencer says, I always find it funny how fast sentiment changes on one piece of good news. That's how markets work, man. Well, that's literally how the markets trade on a day-to-day basis, is based on sentiment. And sentiment changes like that, literally like that. It's so much a psychology game as it is a fundamental and technical game that it's crazy. That sentiment just absolutely shifts back and forth, right? I mean, the last inflation print was a pretty good example of how sentiment changes from down 3% to up 3%. That's a 6% swing in the market. It's not normal. It's not small. It's not normal. It's a pretty substantial move, right? So that's where we are. Anyway, so right now the market's pegged for 50, 25, 25 for the next 3 meetings. So again, we'll see what the Federal Reserve ends up doing. But QQQs now are up 4.3%. Pretty substantial move. It's absolutely crazy. And Kevin brings up a great point. The biggest moves happen in a bear market. That's absolutely true. The biggest rallies, the biggest moves to the upside happen in the depths of a bear market. And I think that's really what we're seeing right now. So Approve says, I have Amazon calls. That's great. Congratulations. Cool. A good idea to start buying into good companies. So if they're trading at intrinsic values, if you think that they're trading at very undervalued levels, which in my opinion, for a lot of these individual companies like Google, Meta, AMD, the ones that I've mentioned, they're trading at dirt cheap valuations, then yeah, it absolutely makes sense in my opinion that that you want to be taking advantage of those. I have cash secured puts that are in the money. So if they do trade at these levels for another month, I will get assigned at those prices minus the premiums. So my cost basis will be in and around these levels. So really, it's up to you if you want to be selling cash secured puts or if you want to be dollar cost averaging straight up. It's completely up to your, what you want to do. So, all right. Yeah, Dewey says 1,000 people in the chat. Smash that like button. Yes, so guys, please make sure that you drop a like if you haven't already and subscribe to the channel. We talk a lot about fundamental analysis, technical analysis, and macroeconomics as well, and stocks and options. So I would really, really appreciate it if you guys, if you all could simply just drop a like and of course subscribe to the channel. So yes, Asadullah, thank you so much for that. I really appreciate it. Next Fed meeting is on 12/13, so December 13th. You're right. We will have both numbers before. Yeah, so we will have another inflation numbers before that next Fed meeting. So we'll have both those October and November inflation prints before the next Fed meeting. So that's going to be very interesting, and it's going to be pretty much set in stone. What type of Federal Reserve rate hike are we going to see in December meeting? So, Jared, thank you so much. I really appreciate it, and glad you were able to make some money and make some profits. So congratulations on that. So what is the strike price on AMD? So AMD $60, Google at around 91, and Tesla's around 190 right now. We already closed the cash good put on Nvidia with about 75% profit. So I will be looking to open new cash good puts on either Nvidia or maybe other companies later today or later this week. Suresh, which Indian language do you speak, Addy? So I do speak Hindi as well. All right, so market bottom 6 months before recession, the bottom passed us, guys, jump back in. So yeah, that's a great point. Statistically, yes, the markets have indeed formed bottom before the recession has commenced. So again, if the recession expectations are in the first half of 23, the markets likely would find a floor before the recession starts. But that being said, really a lot of it depends on the interest rates and where the 10-year yield goes. Statistically, also in the past, during the Great Inflation, the 10-year yield did peak, started coming down, and that's when the markets really found a floor, found a bottom, and then started to rally back higher. And right now what we're seeing with the 10-year yields is a little bit of a double top. So that's a good thing. That's exactly what we want to see is, the yields are kind of not able to break past 4.3, 4.2%. And if they start coming down, that's going to be a good thing for the equities, right? Because the hurdle rate is not going to be as much as before, because the discount rate that we use to discount all future cash flows and earnings back to present value is going to be a lot lower at a lot lower risk-free rate, which is the 10-year yield, versus if it's higher. So if the 10-year yield comes down, bottom line is that's going to be good for the market. So, all right. All right, so let's take a look at some individual companies if you want me to. If there's any companies you want me to go over, I'm happy to. Amazon's now up 6%, just non-stop. Tesla's up also 6% right now, pretty much getting back to almost out of the money here from 177. So pretty much regaining all the profits that it lost from yesterday. Elias says breaking Republican takes both Senate and the House. Let me just verify that. And guys, if you can, I would really appreciate that as well. Let me know if that is actually if that's correct, if we have the midterm election results. Let's see. Because that would be a gridlock and that would actually be positive for the markets as well. Let's see, let me see. News. Yeah, if you have anything on there, let us know. Yeah, Amazon's been going down quite a bit, so 5% move really is nothing at the moment. All right, I'm gonna wait until the chat kind of slows down a little bit so I can actually read. I'm gonna close the poll here, and optimistic is what we actually got. Optimistic plus a little bit of bull case. So not yet. Okay, that's what I also saw, like not yet. That is not correct. That's what I was also seeing in the news, that it's not yet correct because it's still being counted as what I checked from Google earlier. But anyway, so let's just go over some individual names. So Take-Two Interactive, pushing up 4%. Now this is a company that I'm going to be doing earnings overview on. Separate video will be coming out very soon. We know that GTA 6 is under production. It is going to be released in a few years, but quarter over quarter, the numbers have really been not great. The company's been increasing revenue, but they're not generating profit, right? So they're coming down with a net loss as margins are getting lowered, and of course the higher wages, salaries, inflation expense, all those things are kind of eating into the profitability for the company. So resistance right now at about $101 for Take-Two Interactive, and support level is going to stay put around $84, $85 per share. Jolly says, would love to borrow those crystal balls from everyone who says the bottom is in. Yeah, that is so true. Because nobody really knows, when the markets are going to bottom in, right? So we're going to only find out until after it's already happened. So it's always going to be, the bottom's always hindsight 2020, right? So what I would say is just, be cautious. Obviously, one report, one strong rally, and, one green day doesn't necessarily make for anything other than just like that specific day. Like it's not a sustainable recovery yet, right? We're not seeing like, resistance levels being broken or higher highs and higher lows. It's great that we saw inflation numbers come down, and that's exactly what we want to see, but this trend needs to continue. If you see that very similar report for the month of November in December, if you see a very similar report in January, February, March, then yes, that is very, very good. And eventually the Federal Reserve will stop raising rates, and that's going to lead to some ripping rallies for the market. So was the CPI a bull case? We actually got 3 out of the 4 were optimistic, and 1 out of the 4 was bull case. So this right here was a spreadsheet. So we got pretty much optimistic case because we only went up 0.4%, 0.3% for core, and then 6.3% year over year for core. And then headline came in at 7.7%, which was way below 7.8%. So that was pretty much in line with the bull case. So that was the actual results from CPI. And as a result, we're seeing a very strong rally. All right, I don't think we need to do the poll today for the markets, but maybe we will, just because there's some folks expecting the markets to kind of roll over and there's going to be a sell-off intraday. So let's just do markets today. I don't think we need to, but we'll still do it. Green, red, or flat. So make sure that you do vote, and we'll see what the expectations are after the strong inflation print, and of course the numbers that we got today. Veil is red. I feel like my chat is really, really delayed, you guys. I gotta come back to see where I'm at. Yeah, I feel like I'm really, really delayed on my phone. Okay, now I'm getting these. Not a challenge. Let me open my portfolio. Hold on. So what I'm gonna do is I'm gonna actually just remove my phone because I feel like it's really delayed, and I'm just gonna simply look at this. Yeah, because my phone chat is really delayed. I'm just gonna look at over here. So Steve, yeah, this was for these CPI numbers, but what we're doing now is for the markets today, how the markets are gonna react. All right, so I'm just gonna simply look at this for when I'm coming over here. Buy a new iPhone Caddy. Hell, the stock go up, you need a new phone. Yeah, I do need a new phone. I've been using, I think this is the 11, so I've been using it for quite some time, and I will be getting a new phone very soon. Probably next year. I just didn't want to get the 14 because there wasn't really much of a change from the previous years, and Apple always does this, right? They'll make some small tweaks and call it a new phone. So for me to have that really big change, for me to actually notice something, I'll have to go from 11 to 15, right? That's what my plan is for next year, is when they release the 15 to just get that. So yeah, I was gonna get a 14, but then I was like, yeah, it's all right. I can drag this phone for maybe another year at least. Yeah, chat's not keeping up. Yeah, we celebrate. So yeah, it's just going too fast and my phone's not able to keep up, unfortunately. So I'm just going to be looking at this over here. Kevin says iPhone 15 will have 69 cameras. But yeah, if there's any companies, let's just go over AMAT for, let's see, Applied Materials for JT Rock. Right now pushing up almost 6%, so a little bit over $99. And again, this is a very, very good example of how the overall trend is for the markets as well, right? So if you take a look at the S&P 500, and if you take a look at this chart right here, it's a very similar trend. lower highs and lower lows. We're very much in this downtrend. And right now we're getting up to that resistance at around $107. So this is going to be a very important resistance, about $107, $111. So those right there are going to be some levels to watch for Applied Materials, and for us to see whether we get a breakout above this or get a rejection back in, as the RSI MACD also gets a little bit on the overbought side. So a very strong move pre-market, but that 200 SMA and that resistance previously is going to be the level to watch at 107, 109, to see whether we get a breakout or a rejection yet again. Red mic giveaway. Who wants my broken red mic? Maybe I'll do a giveaway for that. You know, just the famous red mic, which is no longer working. Just give that away. Yes, so volume, you know, Oleg brings up a great point. When the volume starts to kick in, that's, I think, going to be really, really interesting. Londa says, has to be destroyed. Maybe I'll do like a live stream of just like destroying the red mic. You know, like the movie The Office, or no, what is that? Office Space, where they're like destroying the printer. Just do like a live stream of me just like burning the red mic, finally. It's caused a lot of pain in the markets in 22. It's crazy. Like ever since I got that mic, the markets have just been chaotic. It's been crazy. It's just been down, down, and down. But yes, Kevin, I have seen that. I just mentioned it. Blow it up. So, but anyway, we got, can QQQ go up 5% today? That would be insane. A lot of names would be up like 7, 8, 10% if QQQs can actually rally. Tesla, look at that, back over 192. It's up over 8% today. Strong move. Lots of buyers stepping in here. AMD is up over 4.8. We got Nvidia's up over 6%. Apple's up over 4. Meta's up a little bit over 5.5. Amazon, of course, up a little bit over 6%. Actually, 7% now. Look at Amazon's chart. Just insane. Can't even imagine what that open's gonna look like in about 15 minutes here. It's just gonna be like fireworks, like literally fireworks across the board. Volatility with a big crush here, down 9.5%. So coming off to 23.5, and next level really is gonna be down to 20. So you know, if you do see another crush here in the VIX down to another 14-15% levels, then we're gonna be looking at those levels, and of course the markets could be to the upside as well. Give it to Mr. Beast. Square plus 10%, block over 10%. So yep, so very nice move on block here. And that was again one of the trade ideas. And you know, as I mentioned before, that Square's breakout is not going to be like a clean breakout. It's going to go through a lot of choppiness. And you know, albeit markets are cooperating, we got the Nasdaq and the S&P to also cooperate a little bit, and that's what we're seeing right now, because it will become difficult for individual stocks to outperform in an environment where the S&P and the Nasdaq are selling off. So if Nasdaq's up 4%, 5% almost, you know, we're seeing a very strong move for Square, and targets are still going to be at $70, $76 around here, all the way up to 89 to 90 bucks for block moving forward. So those are there going to be some levels to watch. You need a green mic. Yes, it is coming. It is coming. Don't you worry. I have a green mic. It's just a matter of opening it up. Tesla to the moon. Tijat says, let's see. 80% green. 80% green. That's not a surprise. Not a surprise as the markets are pushing higher. Yeah, 5% Nasdaq day would be incredible. Would be a lot if you think about it, right? I mean, markets on average go up, like after inflation adjusted, they've gone up like 6 to 7% per year, and a 5 to 6% per day gain just speaks to show, like, goes to show how crazy the volume and the volatility really is for the market. S&P is up 3.5% alone is like pretty substantial on a day. So DWAC, I haven't really taken a look at that company. So DWAC, I know it's like reminder, do research on Honest, Nathan. Yes, I will be doing some analysis on Honest very soon. DWAC, let's see here. So Digital World Acquisition, I know this is like, isn't this like a Trump company? Like, I forgot what it was. I think this is like a special acquisition company, right? That's bringing another company public. Could be wrong, but again, you know, just the overall chart pattern, you know, the market cap. I'm not, you know, well versed in what the company does, so I wouldn't be the right person to ask, at least not right now, because I haven't taken a look at the company yet. $32, $33 is going to be that resistance for now for DWAC. Right now, ooh, this is one of the stocks that's selling off, 9.5%. Okay, we finally found a stock that's down. Vail is also down 0.78%. So we do have a stock that is selling off. Why it's also green, Daniel is asking. Yeah, so because of inflation, Daniel, inflation numbers came in much better than what the expectations were. So DWC is Trump's Truth Social. Yeah, so again, I haven't taken a look at that company, and you know, definitely not seen what the company's all about. The chat is definitely delayed. Yeah, I don't know why it is though. Like it's crazy. It's supposed to be super real time, but I gotta still figure out how to remove the slow mode or whatever that is. I think it's only for typing, but yeah, 10 minutes for the markets to open here. QQQ is up 4.5%. So Caddy put the 60% for technical and fundamentals course on Thanksgiving, please. So we had a 60% sale literally a couple days ago for my birthday. It's no longer available though, unfortunately, but we had one for my birthday, 60% off on the fundamental technical analysis course bundle. But for Thanksgiving, I am again planning another 60% sale. No promises though, but we'll see if I can at least do 60%. The 40% is already discounted, and additional 20% if you guys are interested on that. We'll think of a coupon code. What should be the coupon code for that though? I want some really interesting and catchy answers in the live chat. What can we put as a coupon code for the Thanksgiving sale that we'll do? Let's see how Trulieve is doing right now. All right, no trades at the moment. Slightly down, shows 0.44%. It had a very strong day yesterday. Pivot. Oleg says pivot. That's a good one. That's a good one. We'll just put pivot. Or green mic. That's a good one too. It's a good one. I like pivot or green mic. I like pivot or green mic. One of those. Nikin says FTX. Oh, I feel like it's too early to make jokes about FTX, but really not really. It's you know their own fault, whatever they did. Yeah, use code rest in peace Red Mike. I think that's a good one. Kind of rightly, finally just putting Red Mike to bed here. Looking past the days of our Red Mike. I think 2022 Red Mike really had a whole feel to it, right? It had a whole personality to it. It was fun. Gave us a lot of opportunities. Stayed with us for a very long time, and then finally just gave up on us. Literally just went into its long sleep because of all the curse from all of you guys. So, but yeah, we'll do a couple different ones I like for the discount. But look at Amazon, 7.5%. Tesla's here over 8% now. AMD's pushing through 4.8. Meta's up 5.7. Let's see Google. We haven't talked about Google is up almost 6% also. All stocks right now, Google, AMD, and Tesla, all back out of the money in one single day. You see what the market does? So excited to be assigned, and now all of a sudden they're all out of the money. The yields are really rotating back down here pretty aggressively. He was nothing but cruel. Red Mike lives on in Discord though. Yes, the Red Mike does live on. It does live on in the Discord. So Gene, when do I sell my calls? What's the rule for that? Well, there's no really, like a rule. It really depends on what you are, what your strikes are, what your expirations are, how much you're actually up percentage-wise. There's a lot of different things that kind of go into it. I can tell you, what it really matters. Like, I don't know if you've bought calls or sold calls, but for sold calls, for covered calls, like what we do is we pretty much look for 75 to 80% profit. And if we have achieved that, then we pretty much close those calls out by buying it back. So of course, when you're buying them, you can be up like 300, 400, 500%, a lot more. When you're selling calls or puts, you can only be up 100%. So that's what we focus on, since we're doing the wheel strategy, since we're doing the selling side of options. We look for 75 to 80%. What's really good thing about this rally is what we've seen so far into the open pre-market is that it hasn't pulled back, right? It hasn't really seen any type of a pullback, right? So that just goes to show how strong the momentum is. Like, what we have really seen is like an environment where, we saw that initial pump when the market started trading sideways, and now we're still pushing higher. Like, going into the open, we're still hitting a high of day for the markets. That's pretty substantial, right? Usually we'll see like the markets rotate back down, but right now is very, very strong. So which platform do you use for puts and calls? Pretty much any can be used. We've got a whole broker list on our Discord, so you can actually look at that as well. You can go to our Discord channel, broker list, and that'll show you different locations and which platforms our members have been using. So it's a good like a list of brokerages that members trust and use. There's a whole list of the United States, the UK, India, Singapore, like all these different places that our global community kind of represents. There's a whole list of brokers that are there that you can kind of look into. Pullback is scary, yeah. So guys, everybody was begging for these prices a year ago. No one would want to buy Google at 86 yesterday. Come on, kid. Yeah, that's what really happens when sentiment really weakens, right? So that's part of recency bias, something that we have discussed. When prices go higher, we're more confident in buying stock versus when prices are coming down, right? We kind of tend to shy away from the market, and that is the psychology that kind of needs to be reversed a little bit. Buy on red days, sell on green days. Buy when the markets are going down, sell when the markets are going higher, and that's really what it comes down to. But there's a big roadblock here. There's a big hurdle, and that's our psychology, that's our emotions that kind of come in the way. So it's really important that you kind of reverse engineer that, and put much bigger focus on valuation and of course intrinsic values and stuff like that. All right, so the market's going to open in about less than 3 minutes. We're going to switch over to the NASDAQ here, S&P, and the Dow Jones. The Dow Jones is probably going to be up over 1,000 points today. It's not going to be a surprise if you open well above 33,000. And of course, the NASDAQ is probably going to be at around 10,000. What is it? 10,700 or something, or maybe a little bit higher. Yeah, 10,750, around those levels. It's going to open right there. And the S&P 500 also opening up a little bit over 3.5% right now. Of course, a lot of individual stocks are absolutely crushing it right now. Apple's up over 4.5%. So George, besides the good news, do we have a fundamental change? So that's a great question. So fundamental change, really. So when it comes to fundamental change, the things that have changed from an equation standpoint are the valuations, right? Valuations have compressed substantially. I mean, if you take a look at all the stocks we've talked about, multiples have come down substantially. They're trading at 30, 40, 50 times earnings last year. They've come down to 18, 16, 20 times earnings for a lot of these individual companies, right? So, but the revenues and the cash flows and the earnings and the balance sheets have only gotten better from 2 years ago, 3 years ago. They've deteriorated a little bit this year from compared to last year because the comps were much worse. But the biggest change really has happened in terms of valuation. Now, with inflation coming down, as we learned earlier today, and that's a really good thing. And if this trend continues, what that really means is the Federal Reserve may not need to be as aggressive as they are. And if interest rates pause, or if they pivot, or if they start kind of rotating back down, then that's going to be really good for the valuations once again, right? As interest rates continue to come down, as the yields come down, that's good for valuations. And that will leave room, that will just create this environment where multiples can once again expand a little bit more. So in that sense, the fundamentals have the possibility to change a little bit moving forward if yields come down and interest rates come down. And that's the only sort of key here that has changed, right, from the last couple of years, because revenues, earnings, cash flows, as we have discussed before, from 2 years ago, 3 years ago, they've only gotten better, but the valuations have really, just compressed. Yeah, so 25p last year used to be the norm. Now it's 16. And, that's really what's happened in the last, 9 months, 10 months or so as valuations have come down. All right, so we are ready for market open in about 30 seconds. Guys, make sure that you do drop a like. Right now, 357. Let's see if we can at least get up to over 400 likes. And also subscribe to the channel if you're just joining us for the first time. I really, really appreciate it. And, we talk a lot about fundamental analysis, individual stock analysis, valuations, and technical analysis, macroeconomics, and stocks and options as well. So if you're interested in that stuff, that's going to be the white subscribe button. I think the YouTube's kind of changed the theme a little bit from red to white. So I really appreciate it if you guys just drop the like and, of course, subscribe. All right, here we go. NASDAQ opening up over 3.5%, I think almost 4%. Might be over 4%, actually over closer to 4.5%, I think, when it does open. So we got the S&P opening up 3.6 at 38.82. So all the way over here. Jesus, that's a big open. NASDAQ 5% open here, absolutely incredible. And we got the Dow Jones up over 904 points. Just incredible move here for a lot of these names. And of course, Apple opening up 5%, Amazon opening up 8%, Tesla's opening up 6%, and we got AMD opening up 4.5%, almost 5% right now. The entire watch list is green. Digital Turbine's up 32%. The only stocks that are down is UVXY, but that's also an inverse volatility ETF. And then we got Truly that's also slightly down 2.7%. Yeah, the alerts are just firing off right now. Absolutely firing off. So, I mean, it's still possible that we get a gap fill, because this is a pretty significant gap on the NASDAQ. If you come take a look at over here, this is a pretty substantial gap that we have left for the NASDAQ, but we'll see if you actually do get a gap fill or not. But this is a very, very strong open at over 4.8, almost 5% right now. So volatility here down over 9.5%. Oil prices obviously getting rejected at $86, $87 per barrel. So that will be a resistance right now for crude oil. And Bitcoin 17,500, very strong recovery, 10% right now. Ethereum also pushing through 17%, and we got the yields rotating back down. That's obviously putting a lot of upwards momentum on equities. Yeah, so CPI data is already in. We've already gone over that. We went over that earlier, so you can go back and kind of check that out. Chinese stocks are up 15+%. So can I ask about XBI price target LV20? Makes sense. So let's take a look at XBI very quickly. So biotech right now, XBI just consolidating sideways, supports $76, $77. We do have the 200 SMA to kind of break above, you know, because 3 different instances we've gone rejected at that level, right? So over here, false breakout, over here, you know, not a successful breakout, and then over here, another time just not able to break out successfully. So every time it kind of gets up to that 200 SMA, it gets rejected. So if we can get a nice breakout with heavy volume for XBI, really the next target is going to be all the way up to $94, $97. That's in line with that 300 SMA and that previous resistance where we have gone rejected at. And then talking about LABU, in that sense, it would be $14, $15 for LABU. $20 is also realistic, but it's also, you know, very hard to come by, especially right now. You know, 181% move. XBI would need to move up a lot. I mean, we're talking 118, so 43% move for the upside for XBI in order for LABU to get up to 20. But right now, $97 for XBI is a possibility. That would put LABU roughly in the $14, $15 range. Let's see. NEO 17%. Yeah, so let's take a look at Chinese stocks here. Let's see what's going on with them. Look at that. NEO's actually up 14% right now. XPeng's up 12. Li Auto's up 10.8. So a lot of these names pushing higher aggressively. We got Alibaba's up 5%. Yeah, so all Chinese stocks pushing higher. We are seeing some intraday weakness for S&P. Red candle coming in the first 5 minutes. That's pretty normal considering where we opened. And the Dow is still up 2.29%, but you know, still a very, very strong green day so far. Tesla is really struggling at the moment. Not catching any green candles. So Darius, what was the print? Well, we got 0.4% increase on a month-over-month basis. 7.7% year over year, 0.3% for core month over month, and 6.3%. So pretty much 3 out of the 4 hit our optimistic case, and year over year headline came in at 7.7%, which was the bull case, and hence the market reaction. Right, very, very good. If we can see the high of day today for the Nasdaq, I think that will give us a little bit more confidence that okay, this rally can sustain, instead of just kind of consistently seeing those red candles come in to fill that gap. And that would obviously not be great. So if you can see the high of day for the Nasdaq, I think that would be a little bit more that okay, the volatility is kind of settling down. We're settling into the day as the markets are pushing higher. So Amazon's the one leading the way among big tech, up 8.3%, followed by Nvidia, up 8%. Tesla and Meta are kind of like together, 4.85% right now. And of course, all the other ones, Google, 6%, AMD is 8%. Pretty much entire watch list is insanely green right now. It's absolutely crazy. Square is up 13% at the moment. LABU is up 12%. Shopify, Upstart, 10% each. What a day. I bet everybody looking at their portfolio right now is feeling like it's crazy, isn't it? Darius, love your CPI print expectation vids before the actual. Yeah, so it's really interesting, right? How it kind of hits the bear case and the market's tanked. If it hits the optimistic or bull case, you know, we push higher. So it's really, really interesting in that sense. Nothing's at fair value anymore, Matt says. Well, there's some stocks are. Google, I think, is still at fair value, right? Meta is still undervalued, in my view. So the only stocks that are nowhere near close to our fair value, actually Tesla came down to 175 today, right? Tesla came down to 175. So Netflix is nowhere near close, Apple is nowhere near close, Microsoft is nowhere near close, and Nvidia is nowhere near close. Those are the only 4 that I would say, like, among the big tech are there that are nowhere near close. But then when you look at Meta, you look at Google, you look at AMD, you look at Amazon, those are all, and then of course you look at Tesla, those are 5 that are pretty much at or under the fair value right now. And I do have cash good puts on all the ones that I just mentioned except for Amazon. Arnold, you buy Tesla yesterday? No, so I have a cash secured put. I've mentioned this so many times, but I have a CSP on Tesla at 190 strike. So right now it's in the money. If it gets assigned, I will be, be a buyer at these prices. At 191 minus the premium, which was 750. So the cost basis will be around 182. So 182 would be that cost basis for Tesla. So Mohammed Kadi, do you think that today's print was a good thing for the markets, or how long should we wait for everything to be clear? So, I think one, inflation print obviously does not make a trend. It's good that we're seeing inflation come down. I think the most important thing really was the headline year over year that came down to levels we haven't seen since the beginning of this year, at 7.7%. And then another thing that really was very, very good was the core inflation only going up 0.3%. Now, I'm a little bit confused, I'm not going to lie. I'm a little bit puzzled as to how that happened when shelter prices were up 0.8%, right? So where did our report go? Did I just remove it? There we go. So when shelter prices were up a little bit over, 0.8%, and then we got, so we did see a little bit of, so used cars and trucks down 2.4%, apparel down 0.7%, and then commodities, less food and energy down, medical care services were down. So those were some things that I'm guessing had a much bigger role to play for core inflation to only be up 0.3%. But with shelter prices up 0.8%, I'm still a little bit puzzled as to how 0.3% was only that number. Like, that seems a little bit low. And then core year over year also came down from 6.6 to 6.3%. So, you really start to question, like, are these numbers even real? Like, what's going on? But hey, these are numbers that we have to work with. These are numbers that we actually get. So this is a very good print in my view. I think we kind of hit the optimistic and bull case here. And if this trend continues, then there's a possibility that inflation will indeed roll over, and then the Federal Reserve will have to make that decision to pivot. Right? It's not a question of if; it's a question of when they're going to pivot. So we're just gonna have to wait and see when they actually do that. Because they're not going to keep raising rates indefinitely, right? They're not going to be like, oh, just 75 basis points forever. They're going to pause, but it's just a question of when, right? So, yeah, shelter is lagging possibly. That's true, and we'll find out where shelter prices end up being. I mean, Jeremy Siegel has already mentioned that shelter is lagging quite a bit. So we'll find out soon enough what those numbers end up looking like. And we really do need a high of day for the NASDAQ, as opposed to these red candles that we're seeing, because this is drags on the overall momentum intraday. So, that's just coming lower and lower to kind of fill that gap. Still up 4%, which is pretty substantial, no doubt. But if you can get a high of day, that really kind of settles that volatility a little bit, right? So I'd be paying attention to see if we can actually get a high of day for the NASDAQ intraday. So, cool. What is the high of day? So high of day for the NASDAQ is 10,880, pretty much this level right here. And the high of day for the S&P is going to be around here, 3886. And for the Dow, it's going to be sitting roughly at around 33,430s. Yeah, next rate hike, most likely 50 basis points. That's pretty much priced in. That's 82% probability. Is what we're seeing right now from the markets for the December hike. So, all right, so that's going to be it, everybody. We've been live for quite some time. Thank you so much for joining in. I really, really appreciate it. Very strong print from inflation, kind of hitting our optimistic and bull case. The market's gapping up pretty substantially, although coming down intraday right now as we speak. But still, Nasdaq's up 4%. We got the Dow up 654 points, and the S&P's up over 3%. Right now, with a lot of individual stocks also pretty substantially higher, although Tesla is kind of giving up on some of the gains. I mean, Tesla was up 8% at one point. Now it's only up 2%. It's pretty crazy how, this thing moves right now. Sentiment is not that great for Tesla, unfortunately, right now. So we'll, pay close attention to how this ends up doing. So anyway, thank you so much for joining in. I really appreciate it. And as always, make sure that you drop a like and of course subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below if you're interested in joining and of course getting access to all the trade alerts, options alerts, trade ideas, our fair value spreadsheets, private videos, all that stuff in the fundamental and technical analysis course. Links also down below. I will be taking into account some of the coupon codes that you guys mentioned, and there will be a 60% discount during Thanksgiving and the Black Friday as well. So thank you so much. Hope you all have a fantastic day, and I will see you all in the next live stream.